All right, well, welcome back. Yeah, when markets get disrupted like they have for sure lately, it's good to keep your wits about you and focus on the long term. That's a fact our last guest tried to get across, right? But how about seniors, right? What's happening with them? Well, there's a new term out there, and it's meant to describe our retiring baby boomers. It's called the silver tsunami, and it's a looming silver tsunami of retiring baby boomer businesses and the owners that are with them, and they could dramatically reshape America's small business landscape because nearly half of U.S. small businesses, the owners are 55 or older. Yet just 54% of them, so just over half, have a succession plan in place. What's going to happen when they're gone? That's what this is all about. That's setting the stage for a potential retirement shock that could leave many companies vulnerable over the next decade. This is all according to Forbes. This is why it matters, right? Small businesses employ more than 62 million Americans and account for roughly 43% of U.S. GDP. That's big. And according to the U.S. Small Business Administration, that's what their numbers tell us. We want to know if this will have a big impact on our own retirement plans. So we know just the guy to ask. Please welcome to the show, Mr. Craig Bolanos. He's a co-founder, wealth partner at VestGen Wealth Partners in Chicago. Thanks for being on the show, Craig. All right. Interesting. I picked this out for you actually yesterday afternoon. I saw it and I wanted to kind of see what your comments were. But do you deal with a lot of folks that have businesses and they need to have a succession plan, and then you kind of walk them through that? I mean, I see a lot of it on my side of things with ag and what the succession plans are for, say, for big farms and family farms, and how they kind of move down through the kids and such. And those will probably be part of this survey. But do you deal with customers, or I don't know what you call them, clients that have businesses that you help them with their succession plan, or no?
Yeah, I call it the art of succession. And VestGen Wealth Partners, a very large piece is handling exactly that, the art of succession. Whether it's going to be a farm, whether it's going to be a manufacturing, or any form of closely held, tight-knit family business, everybody knows getting it from generation to generation is tough. Taxes get in the way. Strategy and leadership gets in the way, and ultimately continuity is elusive for so many. But Scott, you've said it, this age wave demographic, the population density study, all of this intellectual capital of these self-made millionaires, these independent business owners, how are we going to fill that hole? Is it going to be consolidation into the world of private equity like we've seen? And what's the impact on small business retirement plans, Medicare, Social Security? I think the confluence of everything is about to intersect over the course of the next 5 to 6 years.
Does that number ring true? About 54% or just over half of them have a plan, 46% don't? I mean, you run into that?
Yeah, I think, a lot of businesses don't even have good governance. A lot of businesses, believe it or not, operate with old-fashioned sweat equity, and people, spit in their hand, shake it, and make a promise, and it works, but it only works so far, right? So if companies don't have good operating agreements, they don't have good shareholder agreements, they don't have what I call continuity agreements to handle the retirement, death, and succession, a lot of stuff gets in the way. And if there's one message I say to all the business owners out there: start planning for succession now. It is never too early to start creating that narrative.
All right, now I'd be remiss if I didn't ask you this, but obviously you've been seeing all the market volatility and seeing what's been happening with the equities, oil, interest rates, and the likes. How much are you changing and massaging things from your end for your customers, or do you have pretty safe and balanced portfolios that you don't really have to get involved too much, even when things kind of get kind of wacky?
Well, Scott, I tell everybody you only need to get wealthy once, and that's why people need to build these globally diversified multi-asset class portfolios. But one of our investment themes for this year has been staying active amid the complexity. And that means, dare I say, having a little bit of buy the dip and sell the rip. So I think it's interesting to take a barbell approach between, say, the software as a service sector and defense stocks based on the replacement cycle that's happening. There's a number of little trades or nips and tucks that we're providing to create value for the shareholders that we represent.
Awesome. And then the last thing I'll say is this, is that you and I are on my radio show, my podcast now on Friday mornings. So that means you get to be on with me a lot of times when we have some decent economic news that gets released from the government. We're hearing more and more about stagflation. Before we go, I'd like to get your opinion about what type of a threat you really think that is right now, because obviously it's come up with higher prices. We've got a CPI tomorrow. Everybody's going to be looking forward to see if that really comes through. But stagflation, is it a big worry for you right now yet, or is that just a word that people are using to kind of get people all ginned up?
You know what, Scott? I'm going to do this. This is my impression of the Matrix. I've been dodging stagflation for years now. Everyone's been nervous about it as a long-tailed cat in a room full of rocking chairs. And I think it deserves airtime because people need to understand what it means to have a slow growth environment with steadily rising prices for consumption. But I think it's overbaked. I'm not going to lay awake at night worrying about stagflation. There's other things that are more pressing to be focused on today.
Well, I mean, it's pretty hard to really get your teeth into that term stagflation, especially when we've seen almost $120 a barrel oil, and now just before I went on went on air, it dipped back down to $79. That's pretty volatile. It's just over 80 right now. The last time I checked, but still, that's a pretty volatile one. And right now, that's the tail that's wagging the dog, though, isn't it?
That is absolutely the tail that's wagging the dog, right? And at some point in time, the strait's going to get open, the oil's going to keep flowing, free enterprise, free men and women around the globe are going to go ahead and solve the problem one way or the other. So everybody knew the prices were going to spike, but they're going to return back down to earth because structurally, it hasn't yet changed. So I just tell people, pay attention to your risk budget, work on that retirement plan, and be focused on these entitlement programs that are all going to be in trouble because of the silver tsunami.
Right. Well, I'm glad you brought it back around to that. I'll finish with this, though. I know that the folks, the listeners of the show have heard me say this before, but I know the New York Stock Exchange trader told me once when I was a kid getting in the business, if you want to bet on the world ending, if you're right, what do you get? So it's better to be in a good mood and invest in the positive rather than the negative. So I appreciate you coming on, Craig. Craig Bolanos, he's a co-founder and wealth partner at the VestGen Wealth Partners up in